Hi there folks, it's Matt Hayson here looking at this week's property market. Well, it would appear that buyers have shrugged off the latest cash rate increase at 4.1% over the course of the week. Over the weekend, we had very healthy foot traffic coming through our open home inspections, really good competitive buyer demand being displayed for our quality properties, and a fairly stable and steady auction clearance rate. Now, it was a long weekend, so fewer properties went under the hammer across Sydney, sitting at 597 for an overall clearance rate sitting at just under 55%. However, we conducted several very strong auctions, which included a significant new suburb record for 20 The Boulevard in Lewisham, which sold for well north of $6 million, and for good reason. This property offered 6 bedrooms, 4 bathrooms, parking for up to 4 cars, a pool, and one of the best family layouts and renovations I've seen come to market in our area so far this year. Also over at 108 Melbourne Drive in East Ryde, this had very spirited bidding, selling for $4.15 million under the hammer, which was nearly $1 million over the expectations. Now, reading the media this week, our so-called experts are advising us that despite the high rate environment, this is unlikely to erase any of the house price gains that we've been experiencing over the last several months. Now, the theory being this high rate environment, there are fewer new listings coming onto the market, which we're aware of, and fewer new homes being built. So supply and demand remains firmly in favour of sellers. In fact, NAB are the only major bank which are actually forecasting negative price growth to close out 2023 in Sydney. That's down by 2%, but all of the banks are aligned, suggesting that there will be house price growth in Sydney in 2024. Now, ANZ and CBA are forecasting that the cash rate will be increased next month to 4.35%. Now, if this does occur, that will mean we've seen 130% of cash rate increases over the lifting cycle. We've not seen anything like that in the past 60 years. But I want to bring your attention back to Gareth Aird, who's the Chief of Australian Economics at CBA, who had previously forecast there would be just one cash rate increase in Q1 2023, leaving the cash rate at 1.25%. Clearly now they're advising us it's going to be at 4.35%. That's the equivalent of an agent bringing a property to market with a guide at $1 million and it's selling for $3.45 million. So I think the general public have had a gutful of this forecasting. We know the RBA is often wrong. We know most of our financial commentators and forecasters are often wrong, and all of the major banks are often inaccurate. So that leads us into this weekend, folks. We're actually seeing a bit of a bump in new listings coming to market. The sun is shining. We've got some great property open for inspection, and we look forward to seeing you out and about. Thanks for watching.